Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're going to I have a feeling today will be a rather fun show. If you were up last night following the news, we're going to stick to the markets as much as we can. We have some movers to discuss, a lot of guidance yesterday. We had Ford and GM and SIG guidance. We're going to talk about this Trump story and what it could potentially mean for the markets as well. And then our guest at 8:35 will be Jeff Goldman. He is the author of Failed Traders, the 20 Common Mistakes Committed by Over 1,000 Losing Traders. We're going to find out what some of those losing trades or losing mistakes are. But first, Joel, how are we doing in the S&Ps on this interesting Wednesday morning?
We're doing okay, all things considered. S&P futures are trading down 2 points. On the upside, you have 4 out of 5 closes right at the 2265 area. That's where your high is. That's a big level. Love to see it up there again for lower risk short. On the downside, 2 lows. Friday's low and Tuesday's low right at the 2259 area. That's the key to any further downside in the market. Crude oil futures coming off the highs here, now hanging out at $51. The lows from yesterday and today are very close to each other, so keep an eye on that. Looking for further downside, and gold just inching its way through 1,200 here, having a little problems getting to the 1190 area first. Dennis, how you doing on this interesting Wednesday morning?
Interesting because of what happened here with Trump. Spencer, we might as well jump into it. Let's just jump right into it. What happened here last night with Trump?
All right, it's a little complicated. There's a lot of moving parts, but I only know about this because I was up late and I couldn't sleep. I was up to like 2 in the morning reading about all this. So here's what happened. During the course of the campaign, there's obviously opposition research, right? Both sides pay for dirt on the other side. As part of that opposition research, a report from a retired MI6 British intelligence officer got into the hands of some people in Washington. This is a report saying that Russia has dirt on Trump, and this report was circulated throughout higher ups in Washington. It's been whispered in the media. A lot of people, journalists came out last night saying that they've had this report for months, or they at least knew about this report for months. So it's been around the block. What changed last night is that CNN finally hit the publish button. They pulled the trigger, publishing not the report. They published the fact that the report was deemed significant enough to present to Obama and the Gang of Eight, the top intelligence officials in our country. And it was added to the addendum of the previous Russian hacking report that we've been talking about now for weeks. So CNN reported the fact that it was this got in front of Barack Obama is what they reported, but they didn't publish the details of the report, the report gathered from the British intelligence official, because no one has been able to verify so far if any of this is actually true. That's the big thing. No one knows if anything in this report is actually true or not. BuzzFeed then took CNN's report as the go-ahead to. They had the full report. They just published the whole thing. They were like, we're going to publish this whole thing. We'll let you decide true or false. We don't know. We'll let you decide. So BuzzFeed publishes the entire report. Again, we don't know if this is actually true or not. Then you have people on the internet, a forum site called 4chan, claiming that they made this whole thing up in the first place. They're claiming that they leaked it to people in Washington and it got passed around, and they made the whole thing up, and that's how this whole thing started. So you got a lot of moving parts here, and there's some pretty salacious details. Now that the whole report is out there, courtesy of BuzzFeed, you can go read it on their site.
Give us the Cole's notes on the salacious details. I just want to hear you
Go
say
ahead,
it.
say it, Spencer.
Yeah.
Just
say it, say
Okay.
it,
Okay.
Spencer.
Okay. So one of the details in there is that Trump he booked the presidential suite in the Ritz Carlton and had prostitutes perform golden showers. If you don't know what that is, I'm not going to tell you. Just look it up. But and that's one
Don't
of
look it up.
that's one of many details in this report. So you have Trump coming out last night via Twitter, of course, saying that this whole thing is fake news. It's not true. This morning he's citing the Kremlin, which came out. The Kremlin said this is not true, which that's one strategy to go with. So he's citing the Kremlin, saying this is not true. He's tweeting about it this morning. If you're not on his Twitter feed, check it out. He's supposed to have a press conference too. That's the thing. I can't remember if it's today or tomorrow. But he has a scheduled press conference. Don't know if that'll happen now, but the whole thing is interesting, and I'm interested with regards to the market because we don't know, like at what point do people in Washington start throwing around the I word, right? Impeachment. And I'm not saying that's what will happen. I'm just saying we don't know if it'll happen. But when it does happen, if it does happen, that just throws a whole wrench into everything. We know the market hates uncertainty, and like what happens if with regard to the inauguration, and no one really knows. That's why I'm interested because of what the implications this has for the market. And so,
I don't think you can get impeached for a golden shower. I mean,
No.
because
But-
look what Clinton got away with. I mean, go ahead. I mean, if you want to go into details, but Dennis, you made a great comment this morning about it, and go ahead. I'll let you make your comments.
I just say Trump has not lived this life preparing to be president. So there is going to be some stuff that comes up from his past that isn't very presidential. And, here's maybe potentially one example. But there's going to be more things that continue to come up. And we've got to be aware. I mean, you have people who are groomed their whole life, politicians, going up and walking a very fine line to be president. Now you have, a businessman who had a lot of money, probably had a lot of fun throughout his life, is going to become president. So you're going to see a lot of different things pop up, digging dirt from the past on Trump because a lot of people don't like him. I think the majority of the population maybe doesn't like Trump. So they're going to be continuing to dig the entire 4 years of his presidency, and they're going to find more stuff. But, the question is, can you impeach him for, just having fun, parties, doing whatever the hell he's done in the past?
Right.
It's got to be pretty extreme if you're going to impeach a president for something that's done in the past.
I also want to stress, again, no one. The reason this hasn't been published before, despite the fact that many people in the media have had knowledge of this, is that no one's been able to verify whether or not this is actually true, right? That's the key thing here. No one knows if it's actually true. So we want to keep that out there because this could be made up. We don't know. But that's it. So I'm done.
Trump is having some fun with it. Here's his latest tweet. I'll just read it from you. Intelligence agencies should never have allowed this fake news to, quotation mark, leak into the public. One last shot at me. Are we living in Nazi Germany? So he made a little pun of the whole thing here. So he's at least having a little bit of fun with it here this morning. But, it's going to be the talk of the day.
So let's just get to the market here at 8:08. I'm just looking at the 2265 level. You had 4 out of 5 closes there. We have some consolidation ahead of earnings. No, I'm not calling another top yet in the market. The 9th top I've called since since we've gone through 2000. But it's very important to settle over 2265 today. But Dennis, we do have some other news that we need to cover before we bring
all kinds of stocks to talk about. Where do you want to start? You want to start automotives? You want to start banks? Do you want to start Sarepta? Where do you want to go?
We're in the Motor City. Let's go with the autos.
Okay, so obviously yesterday during the trading day, GM came out and they said some good stuff because the stock, you can see yesterday during the day, blasted off into orbit. You can see right around just after lunch, stock goes from 36.50 to up over $38. Spencer, do you have the details on what GM said? I think it was guidance there that really propelled the stock into orbit.
Well, there's two things. One, they're adding a $5 billion buyback plan, but also they see fiscal year 17 adjusted EPS at $6 to $6.50. That's the range. The estimate was $5.72 So positive fiscal year adjusted EPS guidance there for GM.
And then or actually last night after the bell, not to be outdone, Ford comes out with their guidance as well, but it wasn't as peachy.
No, well, Ford also declared, a 5 cent special dividend, and where's the actual number? I'm not seeing the actual number. They see $10.2 billion in pre-tax profit in 2016, but I don't actually have the actual guidance number.
I thought I saw something about, and I'm just going from the Goldfish memory because I don't have it in front of me, but I thought, they were kind of talking about 2018 being solid, but 2017 not being as solid as 2018. I think that's kind of why they're hitting the stock.
Well,
You see something like that in the report? Or did I dream that up?
I'm still looking. Hold on a second.
All right. While you're looking, I'll just say that GM got over $38 yesterday, 38.16. That's the highest level GM has been in quite some time. Last time we traded into 38 handle was back in March of 2015. So that's almost a couple years ago. We didn't close over 38. I think 38 is going to be your bogey on the upside here, getting back up there a couple closes. GM's a pretty volatile stock, but it's had a real nice run. I think what I'm going to do is maybe wait for a little temporary top here, wherever it is, come back and get a retracement. And then I think I've been talking about adding this to my portfolio forever. I haven't done it. Gave you all this time to do it between 30 and 32. So they're producing some good numbers. So 38.16, that was yesterday's high.
Then you also had guidance from Signet, the big jeweler here, SIG, trading down 4 points here in the pre-market, so it's taking a pretty good hit. This thing took a hit 4 days ago. Now it's taking another hit here again. I'm not sure what the news was 4 days ago that drove from 95 down to $87. But now we're in the 83 handle here this morning. What did they say this morning, Spencer?
Well, Q4 EPS, what they see is $4 to $4.05. 4.05 was the estimate. They see their fiscal year 2017 EPS at $7.38 to $7.43. But that may not compare to the $8.09 estimate.
What do you think on the levels here? $80, Joel?
I think so. It's
come a long ways, and you look at all those lows back in October, November at 80. I think it starts to act like a magnet.
Yeah, I think let's just take a look at the not much trading. You got a print here at 82.50. Not there. I think a little temporary support may come in ahead of that, Dennis. I keep an eye on 82.21. We haven't taken that out yet. That was your November 8th low, but your November 9th low is probably more important, 81.21.
And then let's just jump over here into the big mover of yesterday, which I was pretty happy about here. Sarepta, you texted me there because I was actually out for an hour there, and when Sarepta's news broke and the stock took off, what they say, first of all, Sarepta drove the stock higher, and then let's jump into this technicals on this one because obviously I own this in my investment portfolio.
This is yesterday morning, right? They had this is Adam Furist here reporting that the launch of that new drug, Exondys 51 in Q4 recorded $5.4 million of sales versus a $4.9 million estimate, according to FactSet, and they reported $329 million in cash. So that new drug is selling more than they thought it would.
So the numbers were higher than expected here, and that's what blasts the stock in orbit. Also had a 16 or 70% short interest, so a little bit of a short squeeze there yesterday. It looks like, it had a wild first bar there. I see it all the way down to $28, and I see it all the way up to 37. So 9 points in the first bar. You can see what happens when you get news breaking. Everybody gets the hell out of the way, and obviously, if you have less liquidity, boom, you can see how quickly stocks can move. I bought this thing. The reason I bought it, I said it on the show, was that it came back around $30, which is the area it broke out from back on September the 19th when it went from 30 to basically 60 in a couple of days. I like them when they come back to the levels that they came from, and I feel like my risk is a lot less there. Not that, it's still a speculative play. This was speculative capital, but I just like the setups when they give it all back. And that's why I bought the stock. I still own it here. I have it as a speculative play in my portfolio. Take everything yesterday not to sell it, because when you get 25% here just overnight, it's hard not to book at least some of the gains here. But Joel, you were like, hold on, and I want the chat to tell me what to do with my Sarepta here. I always say the 2-day rule. Usually this follow through the next day. Sarepta is trading up a little bit here in the pre-market, so maybe you get a little bit another oomph here if I'm following my own rules. But the $40 level looms large here too. So, chat, what do you think? And Joel, what do you think?
All right. First of all, I just want to mention here, Dennis, great call on that one. I mean, it came back all the way down to the level that it broke out. Then you'd have, we talk about, consolidation. That's what you had. Gave you a lot of chances to buy it at 30. Did get to spike up. I mean, I have it a little red on the day right now, Dennis. I have it trading down just a tad. So 38. 38 is going to be the level here because that's where's your close. What was your close from yesterday? 37.89. So let's see what happens. Can we get back over 38, get to that 39, 36 level? Just one thing, Dennis. It's not going to be ripping up like it did last time. And the reason being is a lot of people bought this on the way down at a higher level than you did. Someone was asking about your entry point, Dennis, 29.91. So I'd say if it doesn't just keep barreling through 38, I was maybe hoping you were going to get an upgrade. I don't see any upgrade as of yet. Maybe take off half of the position and put a mental stop in on the rest.
Multiple recommendations coming from the chat here. Stock Hunter says ring the register. Matt Fox says an analyst came out today, said it could hit 90. Baird said it could hit 104 yesterday. Ethan G is saying maybe take some off, sell half, pop into the open. Gumby's saying it's still going to 40. So I like the 40 level too. And I was thinking about taking off half just under 40 as well. So that was my thought process a little bit too. Kind of on board with Gumby a little bit there, and Ethan G taking off half, maybe into 40. I mean, I've been in the stock for about 3 weeks. Not even, I think 2 weeks. And you're already up 25%, and it's a speculative play. Hard not to book some gains.
Can I just say I love crowdsourcing Dennis's trades. I think we should do this more often. I think like once a week we should have a trade.
This all the time.
Dennis just says
the chat can just trade for me. I won't even think anymore. The chat will just whatever the chat does, and then I'll go with it.
Can you program it? Can you be like have a high frequency trading that just like takes all the information, put it in an algorithm, and then does trades for you?
Probably already been done. It's probably being done on our chat.
All right, good volume yesterday too in this, so let's keep an eye on it. Close is a big important level there, and then we're trading a penny in the green right now.
A 40 level's big, and yesterday's high 39.36 is going to loom large here too. Often you see a retest of the high the second day. If we can take that out and take out 40, there is room up to $45. Not today, but over time. But I think that's the big level here for me. So I might ring the register on half, like Ethan G is saying. Let's jump over here. There's a huge bank note or note on the banks from you. Was it UBS?
Yes, sir.
Yeah. UBS basically initiated or downgraded or upgraded every bank in the banking sector. Spencer, can you just fly through the details? I know Citigroup got initiated with a sell. I know JP Morgan got initiated with a buy. Yeah, but there was like 10 other ones in there too.
Here we go. Downgrading Bank of America to neutral. Lowered their price target to $23. Downgraded Citigroup to sell. Lowers target to $58. Initiated BB&T at neutral. Now to the price target of $49. PNC's neutral, $128. U.S. Bancorp is a buy, $60. Downgrades M&T Bank. I said that already. No, I didn't. To sell. Zions Bancorp is neutral. FCB Financial Holdings is neutral. I think I got all of them.
Busy UBS analyst there. So big ones here. You can look in the pre-market. Citigroup is trading down about 0.75% here right now. But you noted a point there yesterday too. Goldman Sachs gets downgraded there yesterday, and it closed green. And what I will say is these banks all tend to just move together anyways. You'll see deviations on the upgrades and downgrades. But when the dust settles, I feel like by the end of the day, they're kind of just all doing the same thing anyway. So sometimes an opportunity, if like Citigroup's down 1% and JP Morgan's up 1%, to actually short JP Morgan and buy Citigroup just to, off this analyst, because it seems like at the end of the day, they come back in and they all kind of move together.
I also just coming in now. Coverage on JP Morgan at a buy and a $98 target. UBS still.
Well, see, I don't know, man. This is, I want to commend the analysts for making some calls here. even though I can't figure out what the hell he thinks of the overall sector with all the upgrades and downgrades.
Yeah.
I mean, we're gonna get a bang for our buck on Friday. I mean, going into earnings here, incredible run up in these stocks, major consolidation. I mean, you just gotta wait, and J.P. Morgan's all over the map when it has its numbers. I saw from Kevin Kelly, he's putting a bullish trade on. He thinks they're gonna up their dividend. I don't know. I just think you just have to wait it out and see how it comes out of this consolidation. Of course, I'm looking for a retracement, leaning short on this, but I haven't shorted any of the banks here, just because you're going to get opportunities on both sides when these numbers come out. I did notice Bank America just has been in a rate. I mean, it's the same picture. You could pull the banks up.
They all look the same.
Yeah, yep. You got to wait for it to break out of this consolidation, and the strangles are probably too expensive. I think you just got to still have some continued patience.
Also, Wells Fargo and neutral now on $58. Keeps on coming.
I mean, you're trading the banks; they're all going to move together. There's the correlations right now are absolutely incredible. Individual fundamental company news doesn't seem to matter nearly as much. I mean, Wells Fargo was the best example of that. They had all the bad news; everybody hated them back in October. Trump comes out and just starts moving with all the banks. Makes new highs on the move and everything. So, all that matters really right now is what the thoughts are on the overall macro picture, Trump and interest rates. That's what matters. Regulation. That's what matters to the banks overall. Individual upgrades and downgrades don't seem to matter nearly as much. I mean, just looking at Bank of America's only down 0.26% here this morning on the downgrade, so everybody's shrugging it off. It's just an analyst opinion in a sector that is, very driven, by what's happening in the bigger picture right now. All right. This is the other big news of the day. Merck and Bristol Myers. So Merck comes out after hours with the drug. Good drug news. This is bad news for Bristol Myers. I'm having deja vu all over here again because we saw this, happen back. It was back in November when Merck had the huge spike up and Bristol Myers had the huge spike down. Actually, it was in October, I think. No, it was actually before that. I go back to the summer. Going back to the summer, you can see it was August. Bristol Myers fell like 15 points that day. Merck rallied like 7 points. Here we are again. It seems like whatever Merck's gain is, Bristol Myers' losses. Merck is trading up 3% here in the pre-market. Bristol Myers trading down 3.6% in the pre-market. What was the news that has done this to these two stocks? The Merck news, Spencer.
FDA acceptance of their supplemental biologics license application for Keytruda, which is a drug. They have a PDUFA date of May 10th under accelerated approval, and so that's what we're watching now is the Keytruda drug and their supplemental. They're ruling out the PDUFA date in 5 months.
What do you think on the technicals here? I do own Merck in my investment portfolio. I do not own Bristol Myers. I had it for a while there, and then valuation I reanalyzed and sold it. But Merck here, is up. Big pop here. It's up 2 points here on this drug news. It was trading up even higher in after hours there last night. Give us a level here, Joel.
Pre-market high comes in. After hours high comes up at 62.40, 62.44. Dennis, I bet you we don't see that today. I bet you we don't see 62.44.
Yeah, because this, every time it seems like it has drug news, it seems to be fading as the play. I mean, even when we had the big pop in November up, with some type of drug news up to 65, and within a couple of weeks, it's right back down. There's just, Merck has just had huge resistance here in the lower 60s, and you can go back here, Joel. You should go back on the charts here. Go a decade ago or even farther than that. If you go really far back here at Merck, I can remember the 62 level back in like 2003. There's, so my goldfish memory's not bad on this one. But go back and look, just way back, and I can remember 62 being the high on Merck, or 60, yeah. So if I go back to 2008, right before the financial crisis, it was 62. And we've come up here, and we're just struggling. We're struggling to get through all these 60s. I mean, the stock's a little more fully valued here. When I was buying and putting in my investment portfolio, I was buying in at 30. Now, I've sold, a good chunk of it, but it's still a big core holding in my investment portfolio. I still like the 3% dividend, even though it was 5.5% when I was buying it back in 2011. I'm going to stick with it, long-term investment portfolio. But, what are your thoughts here?
When you get a big volume stock like this and it gets a big move, I tend to think about how much stock you would have to buy in order to move it during the regular session. So I'm just a natural fader of these kind of moves because of, what it would take. This thing, what's the volume in Merck on a normal day? The volume in Merck on a normal day, what did it
Gotta be
trade?
5-6 mil at
Oh
least.
yeah, actually more than that. It traded 15 million yesterday. You have this move in Merck. It's taking place on how many, couple thousand, well, probably a decent amount of shares here, but 60,000. I mean, to me, no way I'm buying
Well,
into
last
here
night
at
it was trading
60.
though, so
If I
it
took it
probably
home,
traded
yeah,
500,000 shares. Yes, last night I would think it was
okay.
trading like crazy last night.
I don't know. I think this is just a gift here. Maybe not as easy as a short here, but let's say you took home the 60 calls or something like that on the weeklies. I think you got to ring the register. I just don't see this barreling through the pre-market high. And man, is this the same drug news? I know Bristol
Is it the
Myers.
same drug? That's what I'm wondering too. If this was the same drug from before, or is it just they just have competing drugs all the time, and whenever Merck gets
Yeah,
a drug approval, they smack Bristol Myers.
no matter what. I don't know. Pre-market low, Bristol Myers 57.36, just popping above that level here. Let's just take a look on the daily charts, see if we can find just above 58. You had pretty good support. I just don't. This chart looks a little scary here, but 57.27. That was your low on December 14th. That coincides with your pre-market low of 57.36. So that's a level I'd be keeping an eye on.
I just confirm with Nick, who is a better follower of the biotech space than I, that yes, this is the same drug as before.
Okay, so
This has been around the block a few times.
all
They
right.
just keep coming out with news on this drug, and it keeps hammering Bristol Myers and buying Merck up on it. So I don't know how many times you can keep milking that. So I agree with you, Joe. I think it's a gift for Merck. Bristol Myers is the question now. It's down 2 points on this news. Is this a gift for people who are looking for an entry? I mean, this stock was looking like it was breaking out a couple days ago over 60. Now all of a sudden it's down 3.6%, trading down to 57.82. It's kind of in a little bit of a vacuum area. Dr. J's asking too, what are your thoughts on some levels here on Bristol Myers?
Yeah, I just gave that pre-market low coincides with the low that you have on the daily charts here at 57.27. Under that, let's keep an eye on 56.65. That splits the lows from the December 12th and December 13th. Dennis, can we just do a little ETR? Is it ETRM update here?
Yeah, Ace is
ETRM.
updating us in the chat. This is one of his stocks there. This thing has been incredible. I mean, I said it yesterday on the show. I don't know how to trade this type of stuff, so I'm not even going to, speculate on which way it's going to go. All I can say is, when the dust settles, these things usually end up coming back from where they came from. So if you're coming in here at $25 and thinking this is going to 100, maybe it is. But in 2 months, I don't know. I think it's probably back down to the $5 area. Just a guess, though. Stock has went up 1, 2, 3, 4 days in a row. It's went from a dollar, what was it, $1.75 to $30 yesterday. I mean, this is dry ships all over again. We saw what happened with dry ships. It's a little bit lesser version, I guess Ace was saying, of dry ships, because dry ships went from 4 to 120 or something, or 117, and the pre-market that day before they halted, and the stock came right back in. But dry ships, here we are a month and a half later, it's back at $2.
Yeah,
So if you're in this thing, I'd be ringing the register.
I think Ace must be in the Benzinga newsroom, because he's on the same page as some guys here, because we were talking about this also on the pre-market show. ACIA, GNVC, SGNL, ETRM, EGLT. These are all stocks that fit that same mold. Low float, heavily shorted, and a ton of volatility. We know that, Dennis. We know that you hate these stocks, but yeah, good call. I was gonna bring it up anyway, but Ace brought it up for me. All those stocks, same thing, same story.
And I'll
I mean,
just
this is a short squeeze to all hell, low float. Yeah.
uh,
So, it can go anywhere.
hit 30.41 yesterday, closed at 27.70. You did get a dip here. Wow, where'd it get a dip to? $20, and that was at 4 o'clock in the morning. Rebounded. The only thing here that I've talked about this on we've had similar moves. You had the big volume, 1, 2, 3 days of big volume, increasing volume, and then it kind of tailed off yesterday. So maybe the buyers are thinning out here a little bit, trading at 25.50. If you got some profits in this, congratulations. Getting that $30 level will be important.
All right. Just a couple other stocks here. Rite Aid here is trading up in the pre-market. RAD trading up 4%. Stock looking like it might get FTC approval. There was an article, I forget where that article came from,
New York Post.
but where was it from?
New York Post.
New York Post posting that the FTC is looking like the approval is nearing for this merger here, and obviously the merger price is up. I think it's $9, isn't it?
Yes, it is, and it's
Yeah, so we've been holding on through all the saga here. Good job here. It looks like you're eventually going. We said this a little while ago in the show too. It looks like you're going to get paid. I mean, it's 868 here now. Risk arbs are saying this deal's going through. There's only 30 cents left of meat on the bone. Hard to jump in here and buy it now because there's only 30 cents, and the downside is obviously probably $2.50. So risk reward, maybe if you're in it, I'd probably buck it, not go for the last 27 cents or 30 cents because funny things can happen.
Right, and other places to put your capital as well. 8:30 here, Dennis. Quick look at the morning imbalances.
Oh, let's go take a look. Hot off the GE, 146,000 to sell. Wells Fargo, 38,000 to sell. Citigroup with the downgrade, 52,000 to sell. Alibaba small buy and balance, 8,500 shares, trading up 45 cents in the pre-market. I said yesterday I think it could go to 100. It didn't quite get there yesterday. I didn't say it was going to go there yesterday, but I think it still has maybe that on the mind to get up to triple digits here again. It's the trend is your friend here. I like the Alibaba here to $100, 97.20. All the other ones are small here, Joel. It's not much to talk about in imbalance land. Procter Gamble, 31,000 to buy. That's about it.
I've seen a couple airline stocks pop here in the chat. Brad D is asking.
They're moving.
Yeah, asking about Delta and earnings coming out tomorrow. Also, you had Mr. Buffett participating in these stocks. Got some great buys off here. Let's take a look. Wow, Delta is moving up, not on a lot of volume. Maybe hold out for just above 52, but before that, 51.74. That could be a short-term target. That was your December 15th high, and then the recent high of the move was 52.76. But first, got to take care of 51.74. You're going into an earnings report. Really nice rally, really high expectations. May want to consider ringing the register. Dennis, any take on Delta Airlines?
I mean, it looks pretty good on the charts, but when are the earnings? Tomorrow? I mean, one thing we always say on the show is technicals take a back seat when fundamental news comes out. I don't care what the chart looks like. If the company comes out and disappoints on earnings report, and lowers guidance, it's probably going to get hit. So, what matters tomorrow, basically if you're trading something technically and you have a fundamental event like that, it's difficult. So, it looks great on the chart right now. It looks like it wants to go. It looks like it wants to break out. But that being said, with an earnings report tomorrow, I don't think the technicals matter that much.
All right, let's take a look at American Airlines, trading above $49 right now in the pre-market session. But look at the trio of highs right there.
$50.
Yeah. Well, before that, Dennis, you have three highs from 883 to 892. So I'm not sure. Up 62 cents. Not sure what the volume is here, but I think 49 is going to be the key level of the day. If you can get it
there, I think this thing blows through 49. I'll even do a bet with you right now.
Blows through 49? Do you think it closes?
I think it's going to blow through. It's been trading up above 49 in the pre-market. You got UAL. I shouldn't give you all this information now before I get you on the bet, but UAL is going to be up big time here today. They had some good metrics there yesterday. It was trading up 3 points last night. It's already bid up $1.50 here this morning. The airlines are hot right now. American Airlines only up 50 cents. I'll buy that all day long. From you on this bet. I think American Airlines can come up to 49.75 today. 50 is going to be big resistance, so I think it sees 49.75.
What about the close?
It's pretty good. I'm giving you pretty good. No, I don't know where it's going. I just have to see.
I don't know. You talked me right out of that one.
I know I shouldn't have done
it. You did. I mean, man, you just intimidated me.
They went up $1 yesterday, $1 the day before. It's ahead of an earnings report. I think American Airlines $50 though. That's a major resistance point for it.
All right. Well, a little difference of opinion here, but doesn't look like we're going to get a wager off on this one. We covered. Did we cover for once, Dennis? I think we covered all the stocks that we won.
Wait, there was one earnings report.
Super value.
SVU that we like covering. Q3 EPS 5 cents in Q3 versus a 13-cent estimate. Revenues of $3 billion versus $3.8 billion. So they missed on the top and they missed on the bottom there. Did Law and Order SVU.
Perennial disappointer. I mean, this stock is $4.43. Back in 2010, it was like $17. Before then, it was even higher. I'm just not a fan here of super value, long term, short term, anything. This is just not a stock that I'm interested in.
All right, we're going to take our first and only break of the day, and I've been looking forward to this interview with Jeff Goldman. He's the author of Failed Traders, The 20 Common Mistakes, committed by over 1,000 losing traders. Dennis and I did a little contributing on this book, but we're going to take a quick break and bring Jeff right in.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Condon, along with Spencer Israel and Dennis Dick, and we have Jeff Goldman on the line. He's an author of Failed Traders, The 20 Common Mistakes, committed by over 1,000 losing traders. Jeff, how you doing on this Wednesday morning?
Excellent. How you guys doing?
We're doing good. So, you know how I always make up, don't make up, but Jeff probably has the distinction of guests coming on the show that I've known for the longest time. Jeff and I worked together back on the floor in 1985, and the history with our families even goes back to when his twin sisters went to middle school with my wife, Lisa. So Jeff is a longtime friend, great trader, and he embarked on this little project. He talked to Dennis.
Stop though, Joel. Before you get into the book, he was a trader with you. You got to tell some of these stories from back in the day. I always have to get a story on Joel when somebody's got.
All these people
he was trying to get away with it.
Oh no,
he was trying to get away with it, but you got to give us a good story on Joel, because Joel, you've known him for so long. Tell us a story, maybe when you're back, trading with Joel. Give us a story on this guy.
There's no crazy stories. He's just a solid trader, full of
crazy stories you can tell
full
me.
of knowledge and full of pivot numbers. That's Joel's.
That was
always his. That was always Joel's thing. He'd come in the morning and give all the traders the pivot numbers for the big stocks that we all used to trade. This isn't more of a floor; it's more of a trading floor when we were all market makers. So Joel is very, very helpful in giving everybody the big numbers for the day, just like he's doing now, 20 years later.
Yeah,
I agree with you. Hey, Chef, because I started with Joel at Bright Trade in 1999. The first thing I come in every morning, and I have a piece of paper with all the S&P futures numbers, all sitting right there, ready to go on all the different levels. He loves his numbers.
He does it for fun. He doesn't even do it for for other people's. He just does it for fun.
I'm doing it for my buddy. So Jeff, what made you decide to embark on this book, this project? And you ran your own trading firm, but what made you want to do this?
So, I've ran my own trading firm. I've been a market maker. I've mentored traders, and it's always amazed me that 80 to 90% of the traders, depending on what kind of numbers you look at, fail. And it finally dawned on me a few years ago is after witnessing literally 1,000 traders fail. I ran the type of prop firm where traders put up their own money and we gave you leverage. So we didn't really, teach you how to trade. You're supposed to have your own strategy already and some kind of methodology. And we gave you the tools, a very low clearing rate, and we gave you, again, the leverage that it took to be a professional trader. And just over and over again, traders would fail. And then I saw a trend of the same traders doing the same things day after day, week after week, month after month that caused them to fail. And for me, it was just so strange because you see all these trading books. There's books after books after books that teach you how to trade, and they all They all talk about, the perfect setup and money management and trade management, and there's all this information out there, and still traders fail. And I saw that they kept doing the same things over and over again. And, over the years, I started writing them down. And, I tell a trader, look, this is what you're doing wrong. This is what you're doing wrong, if they wanted to listen. And then eventually, a couple of years ago, I decided to just write a little book. And, it's came together. It's 20. I identified 20 of these actions that traders keep doing. So the book is not really, you won't learn how to trade in this book. You'll learn what not to do. That's a big, what differentiates this book from a lot of other trading books.
What is your number one? So out of those 20, mistakes that, traders continue to make, what would you say is the number one mistake that you saw over, your 25-year trading career, or, what's the number one mistake?
Well, the number one mistake, obvious. I'll talk about what I feel is the least obvious mistake. The number one biggest mistake is not getting out of losers. That's got to be the biggest one, and it's so obvious. And it's funny because it's the easiest one to correct. You just get out of it. Just if you're in a losing position, just get out of it. But the one that I think is that I feel that traders do incorrectly is not having an exit strategy before you enter the trade. Because I guess so much thought goes into the setup. Everyone's looking for this is the perfect setup. They sit there and they look at the chart, or they look at their signals, whatever it is, or levels, and you're always looking for the perfect setup. But it's not having an exit strategy before you enter the trade. And an exit strategy on the way down, so on the losing position, not necessarily down, but an exit strategy for when you're down on the position, and an exit strategy when you're up on the position, because you need to know both of those before you get in a trade. You need to know what your risk reward is. And it's not something you can do after the trade. You can't get into it and say, okay, now what? So traders it just amazes me that they don't have a strategy. And you can get around that by another thing. Segues into the next biggest mistake is not keeping a log or a journal of your trading. And you need to review those at the end of every trading day. Not when you're in the trades, but after the trading day. Take an hour off, go do what you have to do, come back and look to see when you got into a trade. Why did you get into it? Did you listen to your exit plan? So that's probably the biggest mistake that I see.
We're on the line with Jeff Goldman. He's the author of Failed Traders, the 20 Common Mistakes Committed by Over 1,000 Losing Traders. Jeff, you've been on the floor. We were on the oldie desk together. You ran your prop room for several years. Can you share with us, you don't have to share any names or anything, but the biggest trading debacle that you've experienced? And it could be dollar-wise, it could be principle-wise. Could you share with us that trade or that setup?
I could tell you my biggest debacle because it wasn't my fault. So I can share it with you.
Sure, go ahead.
When I was making markets for Knight Securities, I traded a stock called Solera Genomics, it was CRA, and it was a very, very profitable stock. I started trading when it went to $2, and it went all the way to $200. That went all the way back to $8, and it traded with a $20 spread, and it was just a crazy stock. It was like my most profitable stock that I traded. I think it was the most profitable stock on at Knight Securities. And there was one time it was trading at 220. And the stock got halted, but for some reason our system kept filling orders. So after it got halted, I kept getting sell orders. So as a market maker, I had to buy those. So I bought about 20,000 shares while the stock was halted. And one of the rules of Knight is you don't bust a trade. So if it got reported back to the client, whether it was Ameritrade or E-Trade, whoever the client was, they don't bust trades. So the stock so I was long about 20,000 shares. It was pretty thin, and it opened down $20. So I was out 400,000. So that was a bad day. That was a bad day. We made it up the next day, but for that one day at that point, that was like one of the biggest losses on the night's listed trading floor. So that wasn't my fault though.
Jeff, maybe talk a little bit about the evolution of the markets, because you came way back from the floor and you've seen these markets evolve from basically floor traders to more electronic markets here, and you've run your own prop firm. You've been so involved in the industry. Can you just talk a little bit about the evolution from floor trading to electronic trading?
Yeah, it's more just how the electronic trading has changed over time. Because even on the floor trading, I was just doing the futures. And the options, but in terms of trading, just sitting in front of your computer trading, obviously we have a lot, and everyone keeps talking about the high frequency trading and the algos and how it's so difficult to for the average person to point and click and make money. And I don't accept that. I still feel there's a lot of money to be made hand trading. You have to, and there's a lot of noise created by the algos and the high frequency trading, and it's a lot more difficult now to scalp. We used to be able to scalp for 2, 3, 5 cents and actually make a real good living doing that. And now you have to broaden your time frame. So, you can't trade minute. You have to go 5 minutes, 10, whatever it is. It's a longer time frame now. And you have to shoot for a little bit bigger profit, because in a 5, depending on the stock, but in a 5 cent or a 10 cent range, there's a lot of noise, and you're going to get whipped around if you try to just take small profits like that, or trade scalping that way. So your time frame has to be widened, your profit has to be widened. So that's the biggest thing that I see. And then traders, that's another one of my chapters in the book, is traders that didn't change their strategy as the market changes, as volatility increases and decreases, and new rules of the exchange come on board. Traders that didn't change their strategies are traders that aren't with us anymore.
Jeff, who should read this book? Is it, should a passive investor read it? Day traders, experienced traders? Who should read this book, or who could learn from it?
Good question. So definitely day traders, because I wouldn't say it's geared towards day traders, but it's definitely all day traders will benefit from it. And people that do a lot of swing trades too, as well. And obviously it's called failed traders. So if you're a failed trader and you're looking to get back into the market, definitely read it, because you're going to see at least a few chapters that would be like, yeah, that's what I did. Yeah, that's what I did. Okay, now it's all making sense. And even struggling traders, if you're not exactly where you want to be, you're going to see maybe, this is a mistake that I do. This is a mistake. Stop doing those mistakes. Stop doing those wrong things. You'll improve your trading. Even if you think you're doing well as a trader, congrats. But I guarantee you'll see something in here that you can take away from it, even if you're a successful trader.
All right. Looks like we already sold one copy of it to Stock Hunter. So, Jeff, I will be looking for my commission check here shortly. Yeah. Maybe you can have it couriered here at Campus Martius.
So there's a website where you can read the first chapter on there. It's failedtraders.com. So it's plural, FAILED traders.com. You can read the first chapter on there and in the introduction as well. So and see the chapters. You can see the mistakes in there. So you can check that out.
Operators are standing.
And it's on Amazon. I'm sorry, and it's on Amazon as well.
Operators are standing by. Both Dennis and I contributed to the book, and I wrote a nice little foreword about Jeff. Thanks for coming on, Jeff Goldman, author of Failed.
And I want to give Dennis wrote one of the chapters as well, and added some insight on a couple other chapters. So.
All
And
right.
Joel added some insight on some chapters as well.
I think I'll just skip the one Dennis wrote.
No, it's a good one. It's a good one. Even though it's number 20, doesn't mean
Yeah, I got number 20.
equally important.
Jeff Goldman, author of Failed Traders, the 20 Common Mistakes Committed by over 1,000 Losing Traders, joining us here on Benzinga's Pre-Market Prep. Jeff, thanks a lot. I'll be speaking to you probably later on today.
All right, thanks, guys.
Thanks, Jeff.
All right, 8:50 a.m. here. S&P futures quiet, down $2 at 22.61.75. Nothing new on the Trumpster. Do we have any updates on the? No, nothing new.
Nothing new.
All right, so let's get back to the stocks in hand here, Dennis. What haven't we covered?
There's a few other ones we could jump into here. Just the ratings changes. So we obviously covered the UBS note, but we never really jumped into some of the other big ratings changes here for today. And there's a couple interesting ones from Deutsche Bank. First, Juniper. They are downgrading Juniper to sell, JNPR, trading down 3.5% here in the pre-market. When you throw that sell word out there, they usually hit it pretty hard. Stock is trading 27.50 here in the pre-market. It's offered at 27.50. So this is an interesting setup here because you had multiple lows around 28.10, 28.11, and we are taking all those out with one blow here this morning from Deutsche Bank. Joel, can you give us anything on this one? Or this kind of looks like it's going in the middle of nowhere.
Yeah, nowheresville. 27 even. That's your pre-market low, but trading up at 27.45. Just a lot of air here between your low that you had at 26.72 all the way up to, boy, this is a spotty chart, 27.78. So it's got some work to do on the downside here. I'm not sure I'd be making hitting the sell button based on that recommendation. But once again, you've had the long consolidation. Now you're going to have to do some work here between 27 and 28.
Then the other one they're downgrading this morning is AT&T, and I think they're a little late to the party. I think they should have did it 3 days ago when I was getting bearish the stock because it's fallen obviously $1.50 since then. I'm looking at this one here as actually, yesterday's low had a nice candle, bounced back. I feel like the washout was yesterday morning, and sometimes you retest that washout because if you look at yesterday's trading in AT&T, the stock just died in the first minute. It went down, you opened at 40.60 and boom, went all the way down to 40.24, and that's a huge move for a stock. It's AT&T. Everybody owns that for the dividend. We see it fall 40 cents in a couple of minutes. I felt like that was a little bit of the capitulation. Everybody that was selling it after the fact here, a little bit late, because it's 3-4 days after the ex-dividend date, and usually, I always say, the better sale is actually on the day of the ex-dividend date. But I think if it gets down and retest that low 40.24 here today, I might be interested in, trying to pick some up.
Yeah, that move down to 40.24 and then the rebound, that got me out of the rest of my puts. I felt like I missed it, and that was so quick. Let's go to a shorter time frame chart here. Holy mackerel!
It was fast, really fast.
Look at that. 1, 2,
Verizon
3.
too.
Yeah.
Both of them just boom. There was the washed out. Verizon. Here's Verizon. Opens at 52.70 and goes down to almost $52 in the first candle. This is Verizon. This is a stock that typically trades in a 5 or 10 cent range for the majority of the day. Falls 70 cents in the first minute. Crazy move.
Yeah, and then the big rebound, back. So I just kind of threw in the towel there, kind of regretting it now. But you used to be able, when you got those kind of moves like that in the first minute or so, or the first 10 minutes, it would give you another chance. But there I'd hit that 40.24 and then rocketed, trading down in the pre-market 30 cents. I think you get back. I'd even step out at 40.30 here, 40.20, 4.30, 40.35, because a lot of people are going to feel like they missed that down move there. Dennis, you also mentioned 40 probably having some bids is a big psychological number.
Duke Energy, Matt's asking us in the chat about it, that one. It got downgraded here at Citigroup. I feel like the energy stocks it's kind of the same as the banks. They all kind of just move together. So when you get a downgrade, it hits it a little bit off the bat. But then when the dust settles, I feel like at the end of the day, they're kind of going to do what is happening, with the other, utility stocks. Duke Energy isn't an energy stock. Well, it's an energy stock, but it's a utility stock.
Yep.
It's not so, you kind of look at the other utility stocks, get the XLU, get a feel for, what you think, is happening with defensive stocks that day. And that's kind of what's going to happen with Duke. I mean, Duke's down 0.33% in the pre-market. Sure, that that downgrade's going to put a little bit of opening pressure on it, but I feel like by the end of the day, Duke Energy is kind of going to do what DTE Energy is going to do, what Southern's going to do, and what the XLU is doing overall. They all move together.
Looking at this one, I could first tell you that you need to clear the $78 level here. Multiple highs. I would say the last 3, 6, 9, except for yesterday, you had 7, 8, 9 highs right around the $78 area. Haven't been able to clear that. So that's definitely probably won't see it today with the downgrade, but that's the key to any potential upside. On the downside here, I'll just stick with my normal 50% retracement here. You had about a 6-point move, so take it back. That would take it back into the mid 75s here and still have a bullish setup. So couple numbers. I don't even think we'll see the mid 75s today here, but 75 to 78. Those are some longer term levels here in Duke Energy.
Opening imbalances are growing. Citigroup now 206,000 to sell. It's now trading down about 1% here in the pre-market. So that downgrade from UBS is putting pressure on Bank of America. 129,000 to sell. Again, that was downgraded here by UBS as well. Alibaba's buy imbalance has grown. There's now 61,000 to buy in Alibaba. It's trading up 50 cents, and it just it's been very strong here last few days. Also, General Electric 309,000 to sell in GE. That's significant. General Motors going the opposite direction. 113,000 to buy in General Motors. So those are a few of note here this morning. I do know ExxonMobil has a buy and bounce right now, 31,000 shares. It was downgraded here this morning. I believe who downgraded ExxonMobil, Spencer? Do you got it?
Hold on one second.
I know it was downgraded.
Dennis, where did
they
you
have?
It was downgraded by somebody. I can't. Wells Fargo maybe. Goldfish memory.
Potentially.
Dennis,
Anyways, ExxonMobil is downgraded here today. That's why it's trading down the pre-market with oil trading up. What were you going to ask me, Joel?
you dumped this at 90, right? Was that on the way up? Was it 89 or 90?
ExxonMobil 90.
90, yeah. And
89 handle. I think 89 and a half, something like that. The 89 handle. And it went up to over, $92. So I was a little out early. It's one that I picked up back in the 60s, when everybody hated it. And I think I bought it at like $68 or $71. Everybody hated it. And, that's when I typically, strike in my investment portfolio. Everybody's loving it too much. It got to 95. So I obviously got it a little bit early. But 90 was a big level for it. And, my argument then was, okay, well, ExxonMobil was $90 a share when oil was $80. Now oil's $55 or $53, and ExxonMobil is $90. So just looking at it from that relative valuation perspective, I felt like ExxonMobil was a little overvalued. That's why I sold it.
All right, great notes here from Mad Fox. Down 6 days in a row. Just looking at this ExxonMobil chart. Look at all those lows. I must not have had this up. I've been looking at the chart at all. Look at all those lows at 90 or a psychological level, and then it took that out. Vavoom. 1, 2, 3, 4, 5, 6 down days in a row. Getting down to this gap area, filling that from that was just after the election. That's probably when oil moved too. So maybe we're working its way back towards the $85 area.
That 85 level's big. I think it could bounce at 85. It's psychological. They like to trade nickels where your option strikes, for your monthly strikes are on these. I know they have them at 2.5 points too. But the 85, the 90, those are just big psychological levels. So I wouldn't be surprised you're straight down here 5 days in a row from 91. I wouldn't be surprised the stock bounces at 85.
All right, I just want to take just a quick note. ACIA, once the high-flying communication stock IPO'd at 27.05, added 100 points to 128, and had a real bad day yesterday. ACIA, I think they were presenting somewhere, got over $64, made a new low for the move here. The only reason I mention it is Sean Udall told me to put this one on my radar here. He think it's kind of been an algo raid and looking to find a bottom here in this issue. All right, Spencer, 8:58, fun show here with Jeff, and want to wrap things up and preview Thursday's show.
Yeah, I also want to mention a good note this morning from Bernstein. They initiated coverage on a lot of Chinese internet stocks. Alibaba outperformed $117 price target. C-Trip market performed $41 price target. Baidu underperformed $150 price target. JD.com underperformed $21 price target. So a pretty comprehensive sector-wide note there from Bernstein on Chinese internet stocks. On tomorrow's show, we got a good guest for you, Mark Chaikin. This guy is been around the block a few times. He's been in the industry for about 50 years. He started his hedge fund in the I think it was early 70s, created his own technical indicators, retired, came out of retirement after the financial crisis, started his own company with his own proprietary trading tools that recently they've launched it. He's got a trading platform. It's called Shaken Analytics. I got a little demo of it last week. It's fantastic. It pretty much uses the same technology as Spotify and Netflix use to find music and movies that you may like based on past behavior. It uses that for stocks. So it finds this is just one of the features, but it finds stocks that you like based on prior stocks that you have looked at. So I was talking to him all about that yesterday. He's had a very, very long career in the business, and I'm sure he's got some stories, because this guy, he was telling me yesterday, Joel, he used to get charts delivered in binders to his desk every morning. He used to deliver a binder full of charts once a day, and that's how he got his charts.
Well, I used to, when I worked at the Merck, they used to have, man, I wish I could remember the name of it, but it was a magazine that I would get every week, and that I would go and put the lines in every day, with a ruler. And then I wish I could think of the name of it. But anyway, Spencer, finish things up.
Yeah. So that's Mark Shaken. He'll be on tomorrow at 8:35. If you missed any part of our show today, you can catch the whole thing again. It's on YouTube right after the show, but then the podcast will be up on iTunes, SoundCloud, and Stitcher about an hour or so from now. Please remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. Also, don't forget, you can get a free 2-week trial of Benzinga Pro right now. Just go to pro.benzinga.com or call us up at 313-723-2000. Hope everyone has a good day. We'll be back with you folks tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.